Good morning and welcome to Market Monday for July 28, 2025. Last week, Ozzy Osbourne, the legendary frontman of Black Sabbath and a pioneering figure for heavy metal music, died at the age of 76. And with stocks back to all-time highs, could this be the crazy train market? In fact, the S&P 500 has now notched 12 new all-time highs this year, after a strong recovery from the tariff tantrum back in April. But don't bull markets typically peak when euphoria takes over and everyone becomes bullish? It still seems that whether it's valuations being too high, or lagging tariff effects, or a slowing employment outlook, there are still plenty of bears out there. And as a reminder, it's pretty common to see all-time highs in the stock market. More often than not, that's what it does, it goes up. You see here, last year there were 57 new all-time highs. Then a couple years without any as we burned off the bear market of 2022, and then a lot of new highs all bunched together. That begs the question, when the market hits all-time highs like this year and last year, does that mean that the market imminently has to go down? This is going back to 1990. Look at all of those new all-time highs in green. And to be fair, inevitably, sometimes a new all-time high will be the last all-time high before the bear market. 2000, here's the so-called lost decade in the S&P 500 stock market where we had the dot-com crash and global financial crisis within the same decade. This is the main reason, by the way, that we encourage diversification within stocks, meaning don't just own the S&P 500 in case something like this unexpected happens again. Point is, major bull markets can, and often do, last for decades, printing dozens of new all-time highs year after year. We should definitely not fear new all-time highs, but we should welcome them, as it's the clearest signal that we're currently in a bull market. Who hasn't quite fully embraced the new all-time highs this year? Well, analysts. Here's where they started the year over here, of course, following the market down during tariff tantrum. And as markets rebounded, so did their estimates, same as it ever was. And of course, not a week goes by without major developments in blockchain and crypto markets. Last week, JP Morgan CEO Jamie Dimon talked in length about why we need to be a major player in stablecoins, digital dollars on the blockchain. And then we have BNY Mellon, the largest custody bank, allowing their clients to invest in tokenized money market funds on Goldman Sachs' blockchain. And PNC Bank teaming up with Coinbase to give its customers access to crypto and digital assets. Have a great week.